Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And also turn on the notification button so you keep going, keep receiving it. I get comments from people. People tell me, get messages, not comments, of people just saying they missed my video or they couldn't find it. And so sometimes it gets lost because you're subscribed to so many stuff or it doesn't go. So make sure you get the notification button so it delivers to you. And disclaimer, just disclaimer, this is just my thoughts on the market. Nothing that's really happening. And so let's get into today's data today. Most of today's data was mainly about uh, it was mainly about housing. There wasn't really anything big or pivotal. I didn't think there was anything huge. So I'm gonna start sharing my screen and you can get more of it if you look at it. 30-year mortgage rates now below 7%. So that's Wednesday. And housing market index, that's 43 right here. 45, and let's see what they say. Fell to 43, below expectations, lowest reading since December of 2023. So mortgage rates remain elevated. So that, yeah, that's not a good sign for the housing market. And if you look at permits, down 3.8% on a month. The consensus was 7%. Housing starts, that's also down 5.5%. That was supposed to be a initial jobless claims. Those ticked up a little more than expected, 235, 238K. And continuous jobless claims, 182, consensus 181. To look at it, this isn't really that it's not good, but it's not eye dropping bad. And let's go see how the markets did. If you look at it, this was really weird. Dow Jones up 300 points, but the S&P was down 13. So probably two or three stocks there. Nasdaq was not doing well, so Nvidia didn't do well. Strange little thing like Visa is up. Seeing if there's something that says biggest gainers or let's see. Oh yeah, let's see the biggest gainers right here. Penn Entertainment, I have no idea. Gillhead Science and biggest losers. Trump Media, Javel, yeah. He's getting sued, so or he's getting jailed, so anyway, but yeah, if you look at the gold market, I mean it was up significantly today. And let's see, I'm gonna go to Kiko to see if there was any type of nearly up as jobless came in at 238K. So yeah, gold prices hold steady after Philly Fed survey. If you look at this, drops 1.3%. You can even see the economic data just from these headlines. Gold really did do well today, though. Obviously, I have to go back, and since they won't have just how it closed in the day, just look at the GLD, 1.25%. Look at this upswing here. Really went down a little bit, finished near its highs. So gold did pretty well. Obviously, I'm not a fan of these things. I'm just using them. SLV, silver was up a lot today. So yeah, this is typical. But let's get into these articles I found. Here is just updating on the housing. As you saw, the housing market based on the numbers is abysmal. More and more renters are staying put. That's not going to change anytime soon. If you follow my video, one of the articles talked about pent up demand. But if you look at it, there's no pent up demand as more and more renters are staying put. The only way to unleash that pent up demand is lower prices, like 30 or 40%. So it says Brian Tucker began looking for a starting home in DC. Yeah, yeah, good luck. In the suburbs, and decided to deal that most options interested were over $1 million, way out of his budget. Yeah, DC is for the super rich. I'll just tell you that. 27-year-old project manager in the tech industries. Only options that are affordable are condos. Yeah, that's pretty much it. You get to live in a small condo. Would-be buyers like Tucker stay in the rental market much longer than the housing market. Apartment owners, that renters moving out to buy homes is at record lows. Yeah, the prices have to come down. Sorry. The monthly cost of owning a home is 61. Now I'm just highlighting so you can see it. Today's 61% more than leasing an apartment. It's true. It's everyone can say about assets, but you default on your mortgage, you lose credit and can't buy it for good. Rent, it's yeah, if it's cheaper, and then so let's see, home price hits fresh record highs in March. Yeah, well, it's a bubble. That's what bubbles do. And then yeah, if you look at this chart here, this is around the 2008 crisis, and then it basically till March 2012, and that's when it bottomed out. And then yeah, it started coming back again. And yeah, eventually it's gonna crash and come back down to here. Or you'll probably come back down to here, around here, in my opinion. Over time. Remember, I said over time. Camden said just 9.4% of move outs were the first quarter due to residents buying a home, lowest in its history. Similarly, Avalon Bay communities reported that first quarter that the share of people moving out to buy a home hit a record low, mainly because of the high cost of ownership. Yeah, prices have to come down. And it's not interest rates. Interest rates aren't going to do it. It's the actual price, the total. So demand for rentals also continues to benefit from the differential in the cost of owning a home versus renting. So yeah, if you look at it, it's a lot cheaper to rent. Renters are staying put for longer right here. So yeah, if you look at it, yeah, they have to either. And the funny thing is, everyone's like, well, if they lower interest rates, no, because inflation will go up, and all their other costs are going to go up, and they won't be able to afford a home. No, prices have to come down. Life is too expensive. So yeah, that's pretty much medium asking rent prices increased 23% over the past 5 years. So yeah, that's pretty much it. It's a lot cheaper to rent than it is to home, so people are not going to be leaving the renting. So that's another reason. The housing market's biggest challenge, consumers are feeling more distressed. Here it is right here. Uh, Americans, home buyers are getting squeezed. Home builder Lenner noted on his post-earnings conference call that consumers are undergoing a growing amount of pressure from sticky price increases and looking for ways to bring down the cost of buying homes. So there's no question, given inflation rates and cost of living expenses, the consumer is definitely getting a little bit more distressed. And we're seeing a little bit more credit challenge customers come through. Yeah, that's nice. Credit challenge customers come through. So yeah, there's that. We were looking at a moment where supply shortage, right? Let me guess, there's a silver shortage too. On the other hand, consumer honesty is looking for elements, incentives, of discounts to be able to afford the housing stock they need. Yeah. So if the Fed begins to cut rates, we believe pent-up demand will be activated. No, if home prices come down 30%, that's when. pent-up demand will be activated, meaning people can afford again. So then look at this. Home builders like Leonard have pulled out all the stops to lure buyers as high mortgage rates keep would-be buyers and sellers on silence. One popular concession is mortgage rate buydowns has helped builders bring buyers to the closing. So yeah, if you look at it, consumers are stressed and they can't afford homes. There's only one solution: lower prices, spur demand. Economics 101. Then let's go to this other article, and this is all Yahoo Finance. This is the funny thing: how home prices begin to come down in pandemic boom towns like Austin, Texas, and Tampa. And this is how it starts. We're in like 2006 of the housing crisis. This is the problem. We do not. This is not a. This is not an immediate crash. Real estate prices surged nationwide, bidding all cash offers continuing to become commonplace. Now the tide has turned in some markets. Yeah, it's always the weakest legs that get knocked out first. It's not the strongest legs. Home prices in some large U.S. cities declined in April, according to global mortgage data. Most popular cities during the pandemic saw the biggest price declines. So shift comes as markets recalibrate. Home sellers and home builders adding more listings just as fewer Americans are relocating. So monthly home prices declined the most in San Antonio at 3% right here. And then in April, followed by 25% in Austin and 16% in Tampa. 30% the most. Austin home prices soared almost 70% between 2020 and 2022, while San Antonio rose 40, Tampa rose 60. So yeah, the most speculative ones are coming down. So, and it's gonna come down everywhere else, but that's gonna take time. So it's basically number of available homes for sale, creator, lowest monthly active listing counts. Not really that all that interested. Uh, One factor is the lack of affordable property insurance, which is getting more homeowners to sell. The average property insurance. So yeah, that's the other thing. This is what I've been saying. Insurance, the mortgage isn't their only cost. Everything else is going up. And there is a lag time. For example, dining out. What do? They cut that out of their budget. So you can only cut so much. Eventually you're gonna cut food. Eventually you're gonna skim your teeth. But for now, it's all the other costs. And they're able to. So yeah, that's the other thing. Affordability factor, a lot of people were drawn to Austin has disappeared in some degree. Cost of living increased, so watered down some allure of Austin. Yeah, the cost of living increased. Of course, they say there's not a market crash. Well, not yet. So, but yeah, that's all. Of course, they don't say there's a market crash, but like people can't afford it. Cost of home ownership, people are or home insurance. The other thing is the economy's full. So when people lose their jobs, if they haven't already. So that's all I have for today, though. Hit that like button, subscribe if you already have it, and I will see you next video.